All right, what is going on, trader? Thank you so much for joining me. It is Sunday night here for the weekend wrap. It is March 14th. Let's get right into it. So, a lot of news this week. Biden finally signed off on the $1.9 trillion stimulus bill, and people have already started getting payments. Unemployment benefits have also been extended, and businesses are to receive their likely last final flush of cash. In really big news, Bitcoin crossed the $60,000 barrier, topping out at $61,074. $61,074 on Saturday, which is huge. The Dow also created its fifth straight record high on Friday. That being said, though, indexes were mixed. And everything was kind of going up on low volume. We'll talk about that a little bit more here. And oh yeah, right here. The Nasdaq had fallen over 6% in the last three sessions as rising bond yields revived inflation worries. Boeing, however, rose 6.82% on Friday, suggesting that investors are favoring cyclical and underpriced value stocks, foregoing tech until the economy recovers. In bond news, the 10-year hit 1.642% on Friday, its highest level since February of 2020. The economic recovery and massive stimulus are likely to put pressure on interest rates, particularly in light of inflation. Don't forget, we have FOMC this week as well on Wednesday. Biden states that all adults will be eligible for the COVID vaccine by May 1st. So that's pretty good news for the economy. And the pandemic also, sadly, worsens in Italy, with nearly 2/3 of Italians facing lockdown. As a whole, Europe struggles to compete with the U.S.'s economic rebound, probably because they're not printing money, but like crazy, suggesting that they may have to ramp up bond purchases. And I don't know a whole lot about this, but from what I understand, that if the economic recovery in Europe doesn't keep pace with the U.S., it can cause a divergence, and something about like the treasury yields. It can create like a conflict there. I don't know enough about that stuff to really say, but I would imagine that probably has to do with the pricing of the euro versus the USD, etc. Novavax rose on news that their COVID vaccine performed well in their final trial analysis. And on the bear side, Carnival Corp CEO, Carnival Cruise Lines, estimates a minimum of 2 years before the cruise industry will see a significant rebound. On the brighter side, though, airline flights are at their highest level since March of 2020. All right, here's the economic calendar for this week. On tomorrow, Monday, we don't have any major events. Tuesday, we have core retail sales. So I'll try to do a better job at explaining what these economic indicators are, but retail sales makes up the bulk of the economy, like 70% of the economy. So if people are spending a decent amount of money in retail, then that's going to be considered to be bullish for the economy. You can see that in February, it's forecast an actual decline of 0.1%, and in January, where there was a 5.9% rise, probably because of stimulus, I would imagine. So we may see better numbers for March. But anyways, that's just something that's good to be aware of, especially if you're a Forex trader. And then we have regular retail sales on Tuesday as well. Wednesday, we have building permits. And again, I'll try to explain a little bit. So this measures the change in the number of new building permits issued by the government. It's a key indicator of demand in the housing market, and higher than expected readings is considered to be bullish for the US dollar. Crude oil inventory is also on Wednesday, and at 11 o'clock a.m. Pacific time, we have the FOMC, so that'll include the economic projections and the interest rate decision. I don't think that we're going to be seeing an interest rate hike yet, but it is definitely coming, especially with inflation on the rise. So Thursday, we have initial jobless claims and the Philly Fed Manufacturing Index, and Friday, no major events. As far as earnings goes this week, Monday and Tuesday, there wasn't really anybody worth mentioning. Pinduoduo was, questionable. It's kind of one of those. I can't even remember, to be honest. I haven't traded that stock in a long time. I remember it was volatile, but it seemed almost like a pump and dump. Thursday we have Nike and Accenture, though, as well as FedEx and Dollar General, and nothing major on Friday. So here's where we are currently in the overnight session in the S&P futures. So Sundays, the overnight session tonight broke above Friday's high, but failed to take out the key pivot high at 39.49, suggesting that this market is weak. So what I'm referring to is this pivot high right here, and we approached it, but there just was not enough volume for us to take it out. And so that is inferring a decent amount of weakness in the market, and you can see that we actually traded below the POC here and started to probe back inside of Friday's range. So that's really bearish. There's something I tried to explain this last week, and it's called the value area rule. But basically what it means is, and I'll kind of show you on my chart here. So anytime you break outside the prior day's range, so like this, where you took out Friday's high, and so if you break outside of Friday's or the prior day's range and then trade back inside the prior day's value area, you have an 80% chance of going all the way through it. Now, this profile right here is a little bit weird because most of the time when you have a really strong bull day like this, the POC is going to be up near the top of the range, but you can see we actually closed on a spike. We had the long period of consolidation, and then we spiked up near the close. We're probing down into this low volume node right here. But like I said, normally when you get this happening, you'll break outside the prior day's range and the trade back inside it, and then you're almost immediately back inside that value area. We have to drop quite a bit. There is going to be a little bit of support right down here at the base of the spike, so we'll have to see what happens there. We had been going up on weak volume for quite some time, so I wouldn't be surprised to see this thing falter, especially because the NASDAQ gave up so much last week. So adding to the short sentiment is the fact that we are greater than 2 standard deviations above VWAP on the daily time frame. So if you know anything about statistics, that is certainly worth mentioning. So basically what I said, if Friday's high fails to hold, my bias will be short with the expectation that this may be the start of a new downtrend. And so here's where we're at with respect to the daily. So here is Friday's range. Here's where we're at in the overnight session. So you can imagine, I mean, if we're able to gain enough traction to trade all the way through Friday's range, this thing could drop quite substantially. So we'll have to see what happens. You can see we do have very big high volume node right here. So there's bound to be quite a few people positioned in this area. Like I said, we'll see what happens here. All right, here are some trade ideas. But first, let's look at what happened last week. So I called out Zynerba Pharmaceuticals at $4.17, and we closed Friday at $4.70, coming just shy of my $5 target. So you can see this is where I called it out during last weekend's weekend wrap, and this is where we closed at on Friday. So I do think this probably has more room to the upside. Like I said, this is a really nice V bottom right here. And then SOI, Solaris Oilfield Industries, I was talking about a breakout above $12.75, so we closed Friday at $14.63. So this thing really took off. So I'm glad to see. I hope some people took that trade, because that was a really nice move if you were able to hold all week. And then Disney, this thing, I had mentioned that the parks were set to reopen in April, and I didn't know how that was going to affect this thing. Initially, I was looking for a breakdown below the $162 level, but the news on the parks reopening, I mean, we gapped up so hard that we completely blew above this trend line, trapped out all these shorts, and we started putting in a symmetrical triangle. So that was just a news anomaly kind of thing. Normally I wouldn't expect something like that to happen, but hey, you know, it is what it is. All right, so here are the setups for this coming week. So Bitcoin, like I said, we broke above 60,000. So I'm basically looking for a retrace to this prior resistance turning support, and then a bounce for continuation to the upside. This is a 30-minute chart right here. And okay. All right, so Home Depot, this is a mid-term swing to a long-term trade. You can see that we tested below 263, found support, put in a very nice V bottom, and we closed right up here at 273, just filling this gap. Looks like it filled, might have been shy a tick. In any event, I'm looking for either continuation up to test this trend line with a break, looking for a break, or I'm looking for us to come back down, retest 263, and then can you continue up higher with strength and a very stable trade at that point. So this is a 4-hour time frame, and yeah, so I think this looks really good as well. We'll just need to see if we continue to push higher on the open tomorrow, or if we pull back to this support zone. Synlogic, SYBX. So this is a midterm swing. So we bounced nicely at this $3 level here. Note that we do have this unfilled gap still at this level, however, but we also have an unfilled gap both here and here. So what I am looking for is a possible pullback to 345 here with continuation to the upside, likely coming back to fill these two gaps up here. So this is a 1-hour time frame. Okay, so key takeaways here for the S&P, presumably, and that's as things stand right at this second. Granted, anything could change. We'll just have to see what happens if we continue to grind down into Friday's range, and what's going to happen at the base of that spike there. If it will, bounce and confirm the spike, or B, if it's going to trade all the way through Friday's range. But as it stands with the evidence that I have in front of me, my bias is currently short. As the imbalance that was created when we tested above Friday's range was rejected, and we are trading, back inside of said range. So there's another thing I like to use called a destination trade. So basically what it says is anytime you test just above or just beyond a key reference point and fail, you're likely to retest the opposing extreme right afterward. So basically what that means is, like, if you test right above the initial balance high and fail there, you're going to test the initial balance low. If you break just above yesterday's high and fail, you're likely to retest yesterday's low. So I think, like I said, my money's on the short side, and I'm usually a pretty good judge with this kind of stuff. Hey, make smart decisions. Don't take my word for it. Make up your own mind. The major event to watch for the week is going to be the FOMC. That is Wednesday at 11 o'clock Pacific time. And like I said, although interest rates are unlikely to change, we'll want to carefully assess the central bank's outlook on the economy, inflation, and an ensuing rate hike. Apart from that, I'm just going to be observing the falling tech sector and consider taking up long positions in cyclical and value stocks. So that is all that I got for you guys. Good luck this week. Like I said, this could potentially be the start of a new trend here. Nobody knows. We'll just have to kind of see how things look in the morning. Of course, I will be here for the morning brief at 6 a.m. Pacific time. In any event, thanks again so much for tuning in here, guys. My name's Corey. I'm going to be wrapping it up here, and I appreciate you watching. Thanks so much, and we'll see you next time. Take care.